Hey everybody, Dan Lucas here with Credo, and thanks for joining me here on 50 States in 50 Days. And today we are on day 35, and we are doing West Virginia today. West Virginia was admitted to the Union on June 20th, 1863. And I'm getting a little cringy because we're getting close to the end of the Civil War. So, Civil War has started. So, it's amazing that we were still admitting states during this time. But in any case, it kind of is like business. I mean, a lot of times there's bad things that happen. You go through ups, you go through downs, but you got to keep going. And so, it's just interesting to me. Now there was a break after the 36th state of Nevada. Uh, Before that, in Nebraska. So after the Civil War, there was kind of a break, or after the Civil War ended, there was a break. But all up until the end of the Civil War, they were still adding states. So anyway, West Virginia, June 20th, 1863, 35th state admitted to the Union, and West Virginia, and not a big surprise, does have a healthy tax credit program. There's a lot of industry in West Virginia. I have not been to West Virginia in a long time, but I do remember that when I was with Arthur Anderson in their audit practice, I traveled to West Virginia for a company that it was in the steel industry, but it was a company that made chemical solutions to keep I'm not sure what they call them, so this is probably pretty embarrassing if people know a lot about this, but the rollers that roll out the steel to keep it perfectly, to keep the steel perfect, that it's rolling out into sheets. There are certain chemicals that they had to put on those rollers, and so the company that was my client that I had to go there to work on made those chemicals. So it's just really cool to see, and all the little things that you don't know happens behind the scenes in some of these industries. That really kind of kickstarted my interest in just business in general, just realizing the whole supply chain of what you consider kind of a simple product. Anyway, I regress. Let's talk about tax credits in West Virginia. So, West Virginia has their tax credits organized, or at least organized on their site, into four different areas. And this is actually quite convenient. I wish other states would do it like this, but they have it sorted by economic development credits, they have environmental credits, they have employment credits, and then they have other credits. Okay, and so I think what I'm going to do is I'm going to read through the other credits, and then I'm going to go back to the three main categories, and go into a little bit of detail on some of the credits in those categories. So first, let's do the other. Okay, so in West Virginia, they have these credits classified as other: telephone utilities rate reduction credit, electric, natural gas, and water utilities rate reduction credit, non-family adoption credit, neighborhood investment program credit, historic rehabilitated buildings investment credit, credit for qualified rehabilitated residential building investment, apprentice training tax credit. Now let's look at that one because that's pretty neat. I've talked about this in other videos. I love the apprenticeship programs. I think it's a lost art. I wish they would bring it back. um, in West Virginia, let's see, a credit is allowed. You can get $2 per hour multiplied by the number of total hours worked during the tax year, and it cannot exceed the lesser of $2,000 or 50% of the actual wages paid. So basically, the apprenticeship training program, you have to have at least 2,000 hours, but not more than 10,000 hours of on-the-job training. So obviously, you're talking about multiple apprentices, but it's pretty generous. So you're going to get, again, $2 per hour multiplied by the total number of hours of work. So if you had 10,000 hours, that would be $20,000 or 50%. So the wages, I'm assuming, are going to be way higher than the 50% of actual wages is going to be way higher than the $2 per hour. So, it could be you can get $20,000 of tax credit for having an apprenticeship program. And that seems like a win-win to me. I mean, if you find the right people that want to engage in an apprenticeship, a lot of times you're going to find really, really great people, just by nature of them wanting to be a part of it. So definitely would encourage you to look at that program. Okay, we have the Film Industry Investment Tax Credit. We've talked about film industry credits before. It's not uncommon. I think a majority of states have them. It didn't used to be that way, but it is that way now. And so any video production, pre-production, post-production, actual filming, the crew, it could be W-2 people, 1099 people, it doesn't really matter. If you're doing anything that's creating or helping to create videos anywhere in that supply chain, you're going to want to be looking at the Film Industry Investment Tax Credit. All right, they have the West Virginia Farm to Food Bank Tax Credit. They have the tax credit for donation or sale of vehicle. They have the Coal Severance Tax Rebate. They have the Mine Safety Technology Credit. I mean, some of these are obviously very particular to the industries in West Virginia. They have the Senior Citizens Tax Credit against personal income tax for property taxes paid on the first $20,000 of taxable assessed value. Interesting. So it's kind of like a homestead exemption in other states. A lot of times, they call it a homestead exemption. It's just they're calling it something different in West Virginia. They have the Tourism Development Credit. They have the High Tech Incentive Exemptions and Credits. Let's look at that one real quick. So the High Tech Incentive Exemptions and Credits. Because I know that this audience is typically, there's a lot of tech people. So let's see. You have to be a qualified business approved by the West Virginia Development Office. You have to be located in a geographic area designated as a high-tech research zone. And looks like it has to do with strategic research and development. And you're going to it's a credit you have to apply for in advance. And the state of Virginia can give up to $2.5 million in credits for this. So if you're in a high-tech area, what I would do is look up the zones that they consider high-tech, see if you're a qualified business. And if you're in there, it looks like all of the eligible spending is pretty broad. So, if you're a legit business or growing or et cetera, I mean, you're probably going to be able to get some of these credits. So I would, if you think you're in tech, look at those research zones. And it says in here, it's actually pursuant to West Virginia Code 18B-13-4B. Look that up and see, look at those maps and see if you're in one of those zones. And if you are, chances are you probably have some tax credit money coming. They have the Special Reclamation Tax Credit, and then they have the Concealed Weapons Safety Course Tax Credit. Some of those stuff self-explanatory, and if any of those bend your ear or sound like it might be something that you qualify for, but you're not sure, obviously look it up yourself. But if you want, put something in the comments of the video, send us a note, send us an email, go to our website, credofinance.com, and there you can send us to our general email box. You can email me at dlucas@credofinance.com, and just let me know if you have a question about it. I'm happy to dig deep into any of these areas on a case-by-case basis. Obviously, we can't go in depth on all of these in these videos, or these will all be 2 hours long or more. Okay, so let's go back to the environmental credits. Okay, so this is a sort of section number 2 of West Virginia tax credits, and there's only one in there, but they have segmented it out because it's a big program. Is the environmental agricultural equipment credit. So we're not going to dive too deep into this, but suffice to say, if you are investing in or own agricultural equipment, now I said this on some other videos, it doesn't necessarily have to be food, okay? And I know that there's a lot of states going into cannabis and all kinds of other herbs and things for like holistic medicine, whatever. So there's tons of things that are being grown. So if you're in any of those businesses or invested in those businesses as a partner, look at this and see if you're missing some credits. Next section I want to talk about is the employment credits. Okay, now these are always huge. Okay, and in any state where there's a lot of technical type job or sort of trade businesses, some people call it blue collar, but anytime you have a lot of hourly workforces, et cetera, in industry, you're going to have a lot of, well, I shouldn't say always, but a lot of times you'll see a lot of credits and incentives around job creation, job retention, training, things like that. West Virginia is no different. So let's see. First part, I'm just going to talk about, there's three of them, and I'm going to go through these one by one. And the first one has to do, it's a military incentive credit. And what they're doing in this one is they're trying to encourage employment of members of the National Guard and the Reserve Forces. That's pretty neat. And it's also for disadvantaged Vietnam era and Korean conflict veterans and disabled veterans generally. I got a huge soft spot for veterans. I'm actually a honorary board member on the Georgia Veterans Hall of Fame, and I have so much respect for these brave men and women. And I just think if you hire them, give them a hand up. A lot of them will work really hard for you. Has been my experience. Anyway, so the credit available to the employer is 30% of the first $5,000 in wages. Okay, so in other words, $1,500, or compensation actually paid to the employee. So for disabled veterans, which could be PTSD, a lot of them have PTSD, the credit is the percentage of disability multiplied by the first 5,000 in wages. For members of the National Guard, credit is 25% of the first 5,000 in wages. So 30% of 5,000 is obviously 1,500. Let's see, and I guess the percentage of disability would depend on them letting you know how much that percentage would be versus the 30% or 25% that's actually in the tax code in West Virginia. But yeah, I mean, it looks like that's a nice credit. I don't know what it means when it says the first 5,000 in wages or compensation actually paid to the employee. I'd have to look at it, but suffice to say, it's going to be limited to 1,500. So it's not huge, but also keep in mind there's a federal credit for veterans. Okay, so this is on top of that. So this is a piggyback credit. So if you want, it's almost like you go after. A lot of people get the federal credit, they forget the state credit, or they don't go after either of them, not realizing that they can shoot two birds with one stone. Okay, there's a Natural Gas Jobs Retention Act credit. So if you're in that natural gas industry, it's a job retention credit. Let's see, credit looks like it's going to be, you're going to get about $1,000 per person on this one. Okay, if you're in that industry, it'll let you look into the details. They also have the High Wage Growth Business Tax Credit. So this is for new high wage jobs created in West Virginia by an eligible employer on or after July 1st, 2020. So in order to be an eligible employer, you have to register to do business in West Virginia. You have to give health benefits to full-time employees, and you have to certify that you pay at least 50% of the healthcare premiums. Okay, so you got to meet all those, got to jump through all those hoops. High wage is typically meaning that you're paying somebody more than the average wage for the state. So let's see if it has specifics in here. It doesn't have specifics in here, but suffice to say, if you know that you suspect you're paying for paying people, and you created some jobs that are paying more than the average wage, you're going to definitely want to be looking at this. It looks like it's not too hard to qualify for, as long as you're paying 50% of healthcare premiums, okay, for your people. Okay, let's go to the last section now, and that's the economic development credit section. Now, this is by far the biggest section, okay? And I'm going to walk through these really kind of as fast as I can, but there is a lot of substance to it. So don't just take what I'm saying on here as being all the information you might need. Anyway, let's see. So the Economic Opportunity Tax Credit is available to qualified businesses that make a qualified investment in a new or expanded business facility in West Virginia. Okay, so this is like, come to West Virginia and do business. We'll treat you well. Okay, this is their lemonade and apple pie to kind of welcome you to the state. Now, the qualified businesses that they refer to have to be they're engaged in the activities of manufacturing, information processing, warehousing, non-retail goods distribution, qualified research and development, the relocation of a corporate headquarters, or destination-oriented recreation and tourism. So that covers a lot. Those are all broad areas. So I would more be looking for, does my business not qualify for some reason because it's kind of nichey? But I mean, that's a really broad area. So I would just assume that you do until you hear different from them. Okay, if you move into West Virginia. It says that a qualified business that creates at least 20 new jobs within 3 tax years is allowed a credit equal to 20% of its qualified investment. Wow, that's big. So this is talking about bigger business. Okay, um, you create 20 new jobs within 3 years. Okay, so it's 20 jobs, so it's like 6, 7 jobs a year. Okay, so that's not necessarily huge business. Okay, that might sound like a lot if you're just starting up, but if you have a trader business that's kind of like they would say is a blue collar type business, that you can have 100 people within 3 years. Okay, so that's not really that far of a stretch, at least from what I've seen. Um, you can get, let's see, yeah, and they have a little kind of tiered system where the more people you hire, the more credit you get. And it looks like the credit is a calculation based on the total investment that you've made in your people. I can't really tell exactly to give you kind of a ballpark of how much credit you would get as far as um, per person, but I can tell you that they will run out of some of these credits. These credits are limited, so they're only allowed to give out. Let's see, you can only get. Looks like they have 20 million or more they can give out per year, but this is pretty complex. But anyway, you're going to get 25% of the qualified investment. So the investment is the total amount of money you spend for the person and on the person. So that's a big amount. Okay, that's a big amount of credit. That's a big incentive. So if you're thinking of moving into West Virginia, um, you have to get this credit. Like you would not want to miss this credit. This could add significantly to your bottom line. Okay. Again, they have a lot of tables and a lot of rules around this. And so, someone like myself or another tax professional would need to help you navigate that from a compliance standpoint. But suffice to say, if you're moving into West Virginia, this is one that you can't miss. All right. There's some more details around the economic opportunity tax credit for corporate headquarters relocation. Okay, so this is because we don't just want to give you credits for creating jobs. We want to give you credits for bringing jobs into the state. Okay, so they're going to cover that as well. So they say if the relocation creates at least 15 new jobs in West Virginia, which means it could be existing jobs in other state, but now they're in West Virginia, the amount of the credit is equal to 10% of the taxpayer's adjusted qualified investment. Okay, so that would include the cost of the real estate, expenses to run the real estate. We're talking big money. Okay, we're talking big credits on this one. And if you hire more people than that, then the credit can go up from there, right? So the minimum is 15, or people that you bring in. It's not higher. You bring in 15 people, you're going to get that credit. You bring in more people, you're going to get a higher credit. Okay, so if you're bringing people into the state, you need to be looking at this and making sure that you're compliant and that you're getting all these tax credits. All right, they have an economic opportunity tax credit for small business. Now, this one specifically says small business, and they actually have it in quotes. So they're defining small business as a business or a controlled group of foreign and domestic affiliated businesses, annual gross sales, not more than amount set by statute. And what they're saying is that there's a maximum amount of gross receipts you can have to qualify as a small business. In 2020, it was 9.9 million, 9.95 million. So if you have more than that, you can't qualify as a small business. If you have less than that, you can qualify as a small business. There's no minimum you have to have. There's just a maximum. Okay, so if you're under 9, let's just say it's 10 million for 2021. If 10 million or under, you qualify for this in the first hoop. Now, let's see what you can get here. If the qualified small business creates at least 10 new jobs, the small business may receive a credit equal to 10% of its qualified investment. And remember, these investments include a lot of things, not just spending necessarily on wages. Okay, it goes beyond that. So all those rules are getting into the fine print, but you're going to want to go deeper on this. Don't just think it's wages. Okay. Let's see. So the next one is they got economic opportunity tax credit for high technology manufacturers. So a lot of that is um, kind of what it sounds like. Now they actually have in the statutes the NAICS code, which is the North American Industry Classification System code. Now you can look these up online, it's real easy, or if you go to your most recent tax return, if you have a business, it's going to be on there. Your CPA or your EA or somebody has put that on there. And now obviously you have to make sure that it's correct, but 9 times out of 10 it is. So that's where you can find that number. Let's see. The credit is based on the qualified taxpayers' investment. You have to create at least 20 new jobs within the first 12 months. For a lot of tech companies, that's not necessarily fast growth. That's pretty moderate growth. And you get 100. The credit is equal to 100% of business and occupation tax, corporate net income tax, and personal income tax, in the order stated, that is attributed to the qualified investment. So wow. So they're really trying to make sure that you get this credit and you can monetize it. Okay. They're going to start knocking out a lot of different credits, and they're going to keep going down like a waterfall and let you knock out every single credit that you could possibly even pay in West Virginia. That's huge. Okay. So this is something that's definitely appealing. And here's the last catch. The median compensation of the new jobs, not the average, the median, that means that half the jobs you create must be more than a certain amount. The median compensation of the new jobs must be greater than an annually adjusted value. In 2020, that amount was $55,800. It can be hourly; it doesn't have to be salary necessarily. But those jobs, half of them have to be above $55,800. Okay, in the tech space, again, it's not atypical. They're way above that. So very neat, very neat. That's a very good credit. There is now the next one is the economic opportunity tax credit for jobs creation. Now these look to be a little more broad, right? So they kind of had some very specific targeted credits we just talked about. This is for businesses that are in manufacturing, warehousing, information processing, goods distribution, destination tourism, and research and development. You're creating fewer than 20 new jobs for regular business, and fewer than 10 new jobs for a qualified small business. Remember, we defined small business a couple credits ago. Let's see. You can receive a tax credit of $3,000 per year for a period of 5 years. That's very similar to the credits they have in the state that I live in, Georgia. But for each new job created. So, you create a new job, $3,000 tax credit for 5 years. It's a $15,000 credit, right? You need to be getting these. Okay, I know that there's some paperwork, there's some admin stuff you got to fill out, but you need to be getting these credits. That's 15 grand per person. Okay, that's huge, obviously. Now, if the number of people that you have working for you goes down, they'll start dinging you for those credits in the future. So if you're on the uptick and you're doing more and more business all the time and hiring, you're going to enjoy these credits, as you keep going. Now think about this: you create 10 new jobs, that's 150 grand of tax credit, right? It's awesome. Better than a poke in the eye, that's for sure. Okay. Next one is the economic opportunity tax credit for jobs creation. Very similar to the last one we just talked about. Let's see. Oh, and this one is based on a minimum amount of compensation. So in this one, they have to be making at least $38,000 per year to qualify for that credit. But again, it's the same thing. You get the $3,000 for 5 years. Okay, let's see. The next one is the manufacturing investment tax credit. Now this one's kind of there's a lot of formulas and algorithms and stuff to figure out what this credit looks like. So you're going to definitely want to use the forms. You're going to have to work with a tax professional to help you with this. But if you're in manufacturing, there's a lot of manufacturing that goes on in West Virginia. You're going to get a credit for making investments in real property, improvements to real property, tangible personal property like inventory, improvements to property. Let's see. you're going to get 5% of the taxpayer's qualified investment prorated over a 10-year period at a rate of 10% per year. Wow, that's really neat. That can be a huge amount of money. So if I was in manufacturing, and that means that this is going to be a key part of filing my return, because this is a huge credit. So if you're in manufacturing and you're not getting this credit, you don't see this on your return, you need to get it. I'm not sure if on this one you can go back to prior years. I wouldn't doubt it, but yeah, this is a nice credit. It's also transferable to someone else, so that's another benefit. Wow, there's some limits on it. There's a lot of fine print. There's some calculations, but this is a huge credit. I mean, this has got to be part of any business return for manufacturing. The business returns include pass-through entities. All right, next one is the downstream natural gas manufacturing investment tax credit. Let's see. If you are investing in a new or expanded downstream natural gas manufacturing facility that creates at least 5 new jobs, you're going to qualify for this. There's a lot of fine print around this. If that sounds like something that you're doing, or know somebody that's doing that, I'd be more than happy to look into this more detailed. I'm going to move on for the purposes of this video, but because that's pretty nichey. But if you think that applies to you, you're going to want to be looking at this. Let's see. The next one is the manufacturing property tax adjustment credit. It has to do with the ad valorem tax. Ad valorem means like it's based on the value of the property. So this has to do with manufacturing inventory, and this is not a huge credit, but if you have property tax, if you have inventory, you need to be looking at this, because even if it's a little bit, you still want to be putting it on your return and get the credit. Let's see, they have the natural gas liquids property tax adjustment credit. Not much there to explain. There's the industrial expansion and industrial revitalization credit for electric power producers. If you're in the electric power industry, you want to look at that. There's coal loading facilities tax credit. If you're in the coal industry, you're going to want to look at that one. There's the post-coal mine site business credit. Post-coal mine sites are it's property that's like undeveloped property that has been it's undeveloped. It's still for a business purpose, and it's been after a coal mining operation. So you can get a credit there to make expenditures on a site that has been a coal mining operation, so after the site, and to get it ready for another business. Let's see. That's going to do it for what I want to talk about in this video. So again, West Virginia had lots of credits. Some of these credits in the other credits area that I just want to highlight again, that I think a lot of people probably miss, are the historic rehabilitated buildings investment credit, the film industry investment credit, the apprentice training tax credit. Big fan of that one. Love that kind of stuff. High-tech incentive exemptions and credits. And then going back, I mean, basically, if you're in West Virginia, they're giving you credits and incentives. Okay, if you're in business. Now, if you're in a business where you might be a law firm or accounting firm or something like that, yeah, there may not be that much in your for it. But you can get the apprentice training credit, right? If you're doing digital marketing, you can get the film and industry investment tax credit. But if you're in anything blue collar in West Virginia and you're not getting tax credits, 99% you're missing some. So you're going to want to get them. So again, anything I said in this video incorrect or needs to be added to, please put that in the comments. My purpose is not to know everything and be the smartest guy in the room. Is to get the information out there to help people. So if you can help supplement what I was saying, if you clarify anything, if there's something I misspoke or said wrong, just flat out wrong, and you fact check me, please correct that in the comments. But again, if you're doing business in West Virginia and you're missing credits, you're probably missing something. So if you have any questions about anything I said, or if you want help looking at these credits or assessing these credits, let me know. We'll do it on a case-by-case basis. Other than that, I'm going to wrap up this video as it's already been kind of long, and I will see you on the next video. Thanks.